What's going on, people? It's GBP Baby. You know how it is. It's currently what time is it? I know it's pretty late. Um, yeah, it's currently 9 p.m. on the 1st of May 2023. We're just gonna work our way through the standard GBP and the euro, and also I'll take a look at Dixie as well, see what he's been up to. We had quite a bearish day on GBP, as we can see, and I'll show you what I've got marked out. So in my last video I marked out these levels here, here, and here for potential buy side liquidity to reach for. This is obviously our closest buy side, and then this was a daily buy side, which is from over here, and then this top one was consequent encroachment of a weekly wick. Let me just show you. So that's the midpoint of this wick, and then the red line is the midpoint between that swing high and that consequent encroachment. And as I said last video as well, I haven't actually used this technique where I've put the midpoint between a previous high and a consequent encroachment, but I did hear ICT mention it, so I did want to check it out and see if price does manage to trade up there. You'll see as well on the weekly, I've literally just noticed this now. It looks like we've traded down to 50% of this wick to the pip by the looks of things. Let's see. So mark out 1.24825, 1.24825, and I'm going to make that dashed. I'll make it orange. And the low of this today was 24807. So yeah, we did trade through it slightly, but again, it's the way that price refers to these levels and uses them as confluence for, to trade into other areas to then redirect itself. So one thing I'll always remember that ICT mentioning was how fair value gaps and such act as bookmarks for the algorithm. So when price trades to these places or to these levels, the PD arrays, it acts as a bookmark, reminding the algorithm, okay, this is where we have to go. So when I see things like this, and it trades to this level, almost like, almost to the pip, it again adds to my bias of expecting that this buy side could be getting targeted this week. Remember, this is all happening on Monday, this big down move. So we'll take a look on the daily and see what we're seeing. I did mark out this level here because this was the opening of a bullish order block. So I marked out that level. Again, we traded through that, and then we've traded away from it. So we wicked down there, but price has remained above it. Again, showing bullish stance and showing willingness to want to go higher. If it wasn't, then it would trade through the order block, but as you can see, it hasn't done that, which again shows a bullish nature in that this order block is providing support. So we'll drop down to the 4 hour. And you can see the levels a little bit more clearly. Here's the 4 hour order block. Yeah, as you can see, we traded down to that. And what I am going to do is I am actually going to mark this out like so. Make that purple, and I'm going to mark the 50% level off it. $1.24692. And then what this allows me to do is that tomorrow, if we do trade lower, I want to see this act as support to push for higher prices after that, because I doubt it's just going to turn around on a dime like that. So now I know that this is going to be the 4 hour bullish order block, which obviously resulted in all this move. We've just filled in this massive fair value gap with buy side and sell side. So if it does dip into here and we are expecting more buy side from the bullish bias, then it should trade higher from here on out. So I'll drop down to the hourly. I do have some more markings. It's looking a bit messy, but I'll try and explain as best as I can. This is a fair value gap on the hourly, the blue box. I'll bring this to the front. As you can see, we dipped into it here. We dipped into it here. I do expect us to dip into it again, to be honest, tomorrow. It's 4 p.m, so it's the end of the day in New York. So what I am expecting is us either trade into this and potentially lower into this order block as a whole before we do start to move higher and trade into these highs. And then the green box, what was the green box? Oh yeah, okay, this breaker. So before the move higher, we have a swing low and another swing low here, and this is the swing high between the previous swing lows. So this should act as a breaker block, which is why we see price returning to and consolidating within that. Remember, there's orders in these areas, so and what kind of orders are likely there? Buy orders, and that's because one way to look at the market is who is in the profit right now. So who's profiting from the market's move today? Obviously the short sellers. So I can imagine that tomorrow or this week that we're going to want to start to target all these stops running up here, because these are all in profit from shorting the market, and the algorithm's designed to destroy these people. So I am going to take these boxes out because it is quite messy, and I'm just going to keep this order block, the purple order block, which is from the 4 hour. We don't really need this anymore. The orange line, that was just what was that delineating again? Oh yeah, the consequent encroachment of another wick. So I'll get rid of that. And yeah, I might even get rid of this box as a whole. We know. I'll keep an eye. I'll keep it there. Just make it blue. Sweet. So as you can see, this this is an example of engineered liquidity. We can see this low getting created, and tomorrow I wouldn't be surprised if this low got taken, swept, and then we started to move higher after that. So I'm going to mark that out as sell side liquidity. And this low as well, take note of the time it was made. This low was made at 12 o'clock, so right as lunch was starting for New York. So I'm going to put sell side. There we go. And then we can look in here to see if we can find, anything that price might refer to specifically. As you can see, there's a clear order block here. This is the last order block before the move higher. Well, technically this whole range is, because this is within that range. But if you wanted to be, specific, you could mark this out. So I'm going to mark this out as a potential referral point. I'll make it, let's make it red. And then I know once price gets into there, it's a high probability setup for a buy. I'm also going to mark out the daily dividers, because another thing that's important to take note of is how we trade, like the high, the low, and the midpoint of each day. It acts as significant. Those are significant points of the day. So, for example, let's mark out the high of today, right down to the low, and then this midpoint, we can see there's highs there and there's liquidity resting above that, so we know tomorrow or the day after it will probably and likely refer to this point. Also, I need to mark out Sunday's opening, so there's a lot I need to put on my chart, which I haven't done yet, but we'll just get that done now. Shouldn't take too long. So this is Sunday. And I remember we do have the FOMC this week, so I shouldn't be in the charts too much, purely for safety concern. Don't forget to like, comment, subscribe, people. I'm posting every day pretty much, so there's always content around for you guys to watch. Right, Sunday 5 o'clock. Cool. So I'm going to mark out, so what I do is I mark out Sunday's opening. ICT suggests to do this, and also I find it very useful because you'll see how price does consolidate around these levels, or use it as like a almost like a projection for later prices. So we'll put that down here, and I'm going to make it a little bit more faint, maybe like 20%, and I'll make it thicker, and then I know that's okay. So that's where Sunday opening is, and this is how far we traded away from Sunday opening. And you can see like the relative equal highs here, this swing high here. All this is liquidity that could happily get taken. And if we look at the range that we're actually trading in now, the current trading range, which isn't down there, what am I doing? So this low to this high, we can see where the 50% level is of that. And we can see this is, if we use Fibonacci, the trading range, let me show you what I mean. You know, this is perfect, this is optimal entry for projection higher. This is again assuming we are going to be moving higher, which I am expecting, to be honest. I do want to see these highs get taken. The only way we wouldn't see this happen is, of course, if we break through this order block completely and disrespect it and disregard it, price taps it and turns away from it, then I would no longer be expecting higher prices. Other than that, until that happens, I am bullish. So I'm just seeing this as a retracement to try and trick people into the market of selling. It's going to buy from here and then push up and work its way into this buy side. But I don't know, we will see. And what I was saying about high open, low and close of the days, you can see we opened pretty much at Sunday opening. This 50% level, I am going to mark this out because tomorrow, in tomorrow's video, I want to see how price treats that. And it'll be interesting to you know, use that as referral. So we'll put that there. And that's pretty much all I'm going to keep on my screen for now. So that brings us to the end of the video. Thanks for watching, guys. Don't forget to like, comment, subscribe. I post every day, and I'll get back tomorrow and then we can see what price action's been doing. I tend to stay out of the markets on Mondays in general though, so that's one suggestion, like just don't trade Mondays, it's not worth it, but obviously that's up to you. And yeah, thanks for watching.